What's going on, everybody? Another day, another Trade to Black podcast. Good to see him. Your host, Shad Dales. More earnings are here this afternoon. We're going to bring in Jim Cacioppo, CEO of Jushi, in just a moment, as well Anthony Coniglio from NewLake Capitals. And wow, another strong performance for NewLake here as they raise their dividend once again, as well some interesting news involving the space and Donald Trump this afternoon. What was announced? In case you missed it, well, we're going to dive into it. Let's welcome in TDR co-host Anthony Varell. Good to see you. Happy Thursday. Lots going on here this afternoon with Mr. Trump. It sounds like he's trying to steal us from Kamala, but there was a press conference that was held earlier this afternoon. What was some of the stuff that he outlined pertaining to the space?
Yeah, so I mean, not to get too sensational, one of the reporters that was in the crowd asked him about the rescheduling initiative that's underway via the Harris. I don't even want to call it the Harris administration because it's still the Biden administration.
Yeah.
And his thoughts on cannabis. He came out and mentioned that adult use legalization measures are happening in Florida. He said legalization is taking place all over the country, and he said cannabis makes sense. No one should be in jail for cannabis. He said that he's going to have a press conference to address his stance on cannabis. It's going to be either good or bad, which obviously, I don't think he would be calling a press conference if he was going to come out against the measures. If anything, what I'm hoping this does is this forces the Biden administration and AG Garland's hand to get Schedule 3, slam dunk it, get the final ruling done, and kind of get something tangible that they can go after, because Trump is only going to be able to campaign on rhetoric and words. He's not going to be able to campaign on actions. If Harris and the Democrats get safe banking, get anything passed, get Schedule 3 final ruling implemented, they now have something tangible and they have something they can talk to that they actually did, not just what they're trying to do. So this is big. I mean, it's a double, it's a win-win. Obviously it's nothing tangible, like I keep alluding to, but the fact that he's willing to talk about it, the fact that he's alluded to, he's going to address it formally. It's great news.
Yeah. Word is getting out. That's for sure. And definitely, I got to admit, the guy is, after last week's debacle, he's done a complete 180. How did he look in the conference? Like, confident? Was his poise good? Like, what'd you find?
He sounded strong.
Yeah.
I mean, I've been vocal on Twitter in the last couple of days that I think some of the things that he's saying are just batshit crazy. His delivery, he doesn't need to be creating personalized jabs and personalized names to just talk down to everybody, and just a bunch of the stuff that he's saying. I mean, this doesn't make me gravitate towards him. It's great to see. But like I said, I'm hoping this forces the Biden administration and AG Garland's hand to get something done, and we can kind of get out of this phase of uncertainty. But the fact that he could come out and say that he's in favor of Amendment 3, that he's in favor of Schedule 3, and he's not opposed to legalizing cannabis, that just takes the uncertainty away from the equation. That is what would happen if he became president. So no matter what, it's a net positive.
Very net positive. And the Republican Party, obviously known as an old guard, but man, this guy has associated himself with a lot of podcasters over the past week or so, and he's looking hip and young, and he's going after that younger vote, and he's not a dumb man. There's always a game plan behind everything that he says, but we will talk about that more tomorrow. But for now, as we have always said this week, we're in full swing of earnings season with both NewLake, Cresco, Jushi, all announcing within the last 24 hours since we've been on. So with that, let's welcome in CEO of Jushi, which trades on the OTC under the ticker symbol JUSHF, Jim Cacioppo. Good to see you. It's been a while, but happy summer, happy earnings season.
Great, thank you. Appreciate it. Thanks for having me. Always love the earnings.
Yeah. Well, appreciate you logging on.
And the breaking news. I feel like I also ran here, competing with like Trump turning on cannabis. So great job on that. Yeah.
Let's begin with late breaking news with Jim Cacioppo on the ground. Jim, what's the latest? All right. Well, let's begin. Numbers. You reported $64.6 million for the quarter ending in June 2024. This compares to a year ago revenues of $66.43 million. Adjusted EBITDA was $14.5 million. That was up actually from $12.6 million in the second quarter. Adjusted EBITDA margins improved to 22.4% from 19%. So how would you best describe your latest earnings to all your investors out there?
Well, I mean, it's been a great margin quarter. You know, I mean, margins and cash flow are the two things we've been focused on. I mean, if you've been listening to my calls, been reading the transcripts, and I know you guys do, but if the other folks on the call, that's been the focus, not growing and its profitability and cash flow. Sure, we'd love to grow revenue. We're not against something like that, but we're doing what we said we would do. And if you look last Q2 of 23, you talked about that, was a little inflated because some inventory stuff that went on.
Yep.
If you look at Q1 last year, Q2 last year, 3 and 4, and well, forget the Q2 because that was a little inflated on an EBITDA margin basis. But then we sort of kind of came down a bit. But it's been a steady progression since Q3, Q4, and then Q1 of margin growth and cash flow growth, with that little blip last year in Q2. So I love progression. I love slow and steady, and I'm super excited about our quarter, and I'm sure we're going to get to the refi, but that was a nice thing to get done too.
I want to take one step back with all the stuff that's moving right now in Washington. You look at states like Ohio, potentially Florida in a couple months, as well as Pennsylvania. Like when you look back right now, what do you think the overall health of this industry, when you look at it from a broad perspective across not only your company, but the industry, where do you think it sits right now?
I think the industry is great. I mean, it's fantastic. I mean, there's a couple of so let's look at the top 10s. There's a couple that are over leveraged still, not us. I think it's very, very clear that we got a refi done. But there's a couple, and one announced an asset sale, and the other did a debt restructuring and pushed it out. And has a chance with Florida flips. They're probably fine. The tier ones, right?
Yep.
They've been very disciplined about driving profitability for the most. One of the big ones, not so much, but everybody else big time, right? And very consistent, progressive basis. This industry's been delevering, and then I think honestly on the tier twos, I think the second level down, the bottom 5, I think we were the standout so far. I mean, because TerrAscend's reporting pretty soon, but in terms of margin, and just the progression and the consistency. So I feel really good about the industry generally.
Okay. Last thing I wanted to bring up, and I know you're going to take things over, Anthony, was your refinancing announcement from last week. Interesting, debt's not due, long-term debt's not due until 2026. But part of that announcement is you put in $9 million of your own money, along with founder Dennis Arsenal put in $7 million of his own money. So from a confidence level, that's a huge number. Like, what are you
16,
seeing?
Yeah, 16.
Yeah.
9 plus 7. Yeah, I just want to make sure people are confused that 7 was a part of 9. No, I put in 9. Dennis put in 7. Dennis, by the way, was a founder, original shareholder. Yeah. So
what's that say? If you're, whether you're an institutional that's trying to learn the space, or retail investors that are trying to that's a very volatile industry to say the least, but you're putting in $16 million of your own money from a confidence level. What's that say about how you look at your company?
Well, I would say to start that, we both are the largest shareholders. So it's not like we need to do this to gain exposure. It's not like, so let's, we think it's just a great investment. And it's a top of the capital structure. And I think it was a win-win. I think we refied out somebody who supported us, but they were definitely like what I'd call a hard money, traditional loan kind of institution. They did a bunch of things along the way that helped us by, making, I think the market might have been skeptical of them, maybe overly so in my view, because they gave us a lot of waivers and stuff as we worked through some issues, like, when we had the auditor had previously given us an issue and they waived it. And then that issue's gone now because we refied, but all related to the debt falling due. But now we have a very shareholder friendly loan led by 2 large shareholders and a hedge fund who's known me for years, I should say, not necessarily the people, but I've been in the hedge fund world for since 1995, and just the pedigree of me, sort of institutional pedigree. And then it was rounded out by some people, some people I know really well. And so, I just think it's a solid group, a very tight group. I don't know if it's a half dozen accounts, something like that, 6 or 7. And so we feel super about it, I think, people in their dark dark days and they want to think bad and they want to, they kind of think there's some crazy, awful loans going to come in, and you see errors.
Yeah.
I shouldn't say names of other companies. They always tell me not to, but I'll forget them, whoever they are.
We'll edit that out. Oh, we're live.
Yeah, exactly. So you see errors, and they gave it 30% of the equity to the creditors, and they didn't give any debt up to creditors. It was just a crazy deal. They pushed it out, but they took 30% of the equity with no debt forgiveness, right? So I could see why the market could have been concerned, right? I'm not saying the market's illegitimately concerned, but it wasn't a concern. We had it under control. I'm a hedge fund guy. I did a lot of credit, did a lot of stress, did a lot of all kinds of different things. That wasn't going to happen to a company that I'm leading, where I'm the biggest shareholder. So I think it's a huge thing that we got that done, and I think we're going to be rewarded for it. And by the way, the other part of that is that we are now in growth mode, right? Because before that, the other thing that was in that the press release for the quarter or prepared remarks, I can't remember, is we paid down since July 1st of 2023. We started paying down debt. We paid down about $28 million of debt, which was almost 15% or something of our debt. That's a lot. For some people thought we were struggling and had no levers to pull. We seemed to have pulled a lot of levers. Some was asset sales, some was tax refunds, most of it was cash flow. And so we had a very strong cash balance to start with. We always, husbanded that because we were like, this will help us, get we wanted to delever. And so the end result of it is now we're down to $180 million of debt that falls due. We exclude some debt on our balance sheet to this company called San Martino, who sold us the Massachusetts asset. These were indemnity notes, and the auditors have recognized that there's no maturity on that debt anymore. It should, in my view, it should be a contingent liability, right? Not debt, but one step at a time. At least we got them to remove the maturity, right? And so we'll get that to the right place sooner or later, I hope. But a contingent liability means they have to win a lawsuit against us, and they haven't sued us yet. And we feel good about our position, and we're going after them for a lot of money in that circumstance. So 180, call it, is a debt falling due. It's in our 10Q. We talk about that number. I think the market's adopted that number. We have 20 million in cash, and that's out to 160. If you annualize our EBITDA from Q2, it was almost 60. So you're talking about debt to EBITDA on a net basis of like 2.6 times, right? Curaleaf is 2 times. Cresco's 2 times. Like, okay, guys, like, you want to give us a big discount because of 0.6? And oh, by the way, we're going to be the fastest growing company in the next 18 months, I think, right? Why is that going to happen? Because we're opening up Ohio. We just flipped the store in Ohio. Tremendous few days. I don't want to annualize those on air, but if I did annualize those on air, I'd be a very happy man. If that was really going to be true, is what I'm saying, right? Because you don't annualize a couple of days, right? And so, but tremendous. And then we have another store we're opening in Ohio, right? And then early rec market, underpenetrated medical market. It's going to be the best market that's flipped since Illinois, in my view.
Interesting.
And then we're in the process of putting together various deals to acquire 6 more. So when you add that up, it doesn't take a genius to do that math, right? A per dispensary in early rec market, what's a per dispensary? What's the state level EBITDA? Our EBITDA margin, right? Our EBITDA margin overall was 22.5% after all our corporate overhead, right? Which is a lot. I mean, we have a we're a small company. We're not amortizing that fully yet, right? And but most of our sales are medical, which are lower margin than an early adult use market. So it's going to be great, and we're going to drive our EBITDA up. So when you look back, when you look forward, our leverage is the same as Curaleaf or Cresco or whoever. Like, and so we feel great about our capital structure. And then what this has unlocked is I'm not talking to you about paying down debt anymore. I actually didn't do things like this for a while because I got sick of talking about that. I just want to get it done and not talk about it anymore.
Yeah.
And so I've been kind of not hiding out, but I've been letting Trent do the dirty work of talking to investors and everybody. And I've been getting the deal done, right? And other stuff we've been doing, turning the company around and all this stuff,
Well,
now
you
that we
said it.
have-
You said it to us. You said it to us back in April. Want to lay low and like to get a lot of the operations, stuff done in the next few months. So I understand where you're coming from, but now here we are, and I think you're right about Ohio as well. Like I was there actually on opening day on Tuesday of this week,
cool.
and it
Yeah.
looked very promising. But Anthony, I know there's a few things that you want to
Yeah,
touch on.
speaking of shifting the focus to profitability, I mean, gross margin this quarter was 50.4%. Is there a target that you have in mind? Or I know that you're not giving guidance, but is there a sweet spot?
I think of things long term, right? So when I give a number, it's kind of like where we want to get to, what our aspirational goals were. So I look at the top of the tier one, right? And I try to draw similarities and say, what should we look like? Because again, it's much easier. I was an investor most of my career. I'm running a company now, but I'm also the biggest investor in the company. So I know the easier way to do this is saying, wow, look at what these people are doing. Why can't we do that? Well, there's reasons why you can't do that, and right now we can't because we're smaller and we're also medically focused, right? But when you flip Pennsylvania, which is the next one to flip, after Ohio, we build out Ohio. We know we're doing that. That's money in the bank that we're doing that. Now we may stumble and not get it. There's risk, but I don't think I'm not this enthusiastic because I'm focused on risk. I know this is what we do. We've rolled up licenses in states. Like this is how we made the money, right?
Yep.
And so meaning growing the revenue, that money, and the EBITDA, the cash flow. The good deals have been licensed deals for us. And so those people are still at Jushi, by the way, that did that, not just me, the whole team. And so then Pennsylvania flips, and then Virginia finally, right? And when you look at that, our EBITDA and gross margins, should be like where the top tier one companies are. Why do I think where the top tier one companies are? Well, I think our margins are pretty close to the top of the tier two. So we're already doing a pretty good job, number one, and we're medically driven, and we have an under leveraged platform, right? You understand, Anthony? But more under leveraged platform, right? And then the other thing is we don't have a lot of these, I call IPR leases, industrial properties, whatever. It's kind of loan shark money. 14%. When we got into business, the guys who started early were sucking this stuff down, right? And they were sucking it down because there's only access to capital. Well, the terms were basically 14 to 15% lease rates forever. You can't get out of that lease; it never expires. And the escalators are 3.5%. So you look at those balance sheets. Guess what? Who doesn't have that? Well, I don't think Verano has much of that. They'll tell you that, right? I mean, those margins have always been consistently high, right? We have one of that, which was in Pennsylvania. We bought it in a distressed situation. It was only 17 million drawn on that bad stuff. Like we drew a little bit more later on, but we got the rate down and the escalator down. But my point is that's offset. If we don't have that big fat R on all of our grower processors. We own Virginia. We own Ohio. We have a mortgage on Virginia. I think it's like an 8-9% mortgage. And that's the place we're growing. We have normal leases elsewhere, not the kind that expired, the kind you could renegotiate, the kind that aren't that high with that kind of escalator type thing. And so that's one reason. That's one reason. And the other now is we got slim early in our life. A lot of these companies got slim later, right? So in other words, like Verano always ran lean and with high margins, right? But GTI has always done a good job on margins. But if you look at the other ones, a lot of them have slimmed down more recently. They're in their 10th year of business, 12th year. We're in our 5th or 6th year of business. So we have this lean mentality. It's not something you forget. Mm-hmm. It's not like a like it's like taking Ozempic. As long as you keep taking the Ozempic, you're going to be thin, right? You just can't go off of it. But when you get lean corporately, like why are you going to go gorge again? I mean, like you have to be like almost have to be bipolar. Like why would you do that? So we're not going to do that. We have the attitude. We know how to do that now. That's not something we knew a few years ago.
And speaking of Virginia, I listened to the conference call. I mean, it's no secret that Virginia, we'll call it as a core asset to Jushi, core asset to the story. One of your peers executed a transaction, I think 2 weeks ago, at almost the market cap of the company right now. And it's almost the market cap of their company as well. So on a valuation basis, I mean, how are you thinking of the company right now as like valued given that asset that you have in Virginia that's going to be a very valuable asset down the road, and it's a core asset to the company today.
Well, since you dropped this Trump thing at the beginning of this call and made me look bad with all the news, I have to make sure I'm somewhat provocative and call it like it is and entertain you and your viewers, right? And tell speak the truth, like or at least my truth. and so
let's hear it, Jim. Let's hear it.
So in Virginia, they cut off one of their arms, so they have 4 limbs, right? One limb was New Jersey, one limb is Virginia 1, and the other Virginia 2, and the other one was Pennsylvania, Ohio flipping, right? They're kind of small in Pennsylvania, but they have really a nice Ohio. But they'll do well in Pennsylvania too.
Yeah.
But they cut off a limb, so it was a win-win transaction because I think the creditors were breathing down their necks, and I think it's good for their stock to get that out of the way. And I think Verano got a great deal, right? And so I think and that asset is far inferior to our asset. I think we do probably a lot more revenue, right? Because they put their number out, but I don't. But I believe we, based on what I know, that we do a lot more revenue than them, and it's our highest margin business, and we're a higher margin company. And they sold the worst of the 2 assets. I know that for a fact because we're a big merchant buyer and we know the stores we sell to the stores. They sold the worst of the 2 assets. That GP is not expandable. It's stuck at 70,000. Verano do a great job fixing it up and adding capacity through better techniques and double stacking and stuff like that. I'm sure I haven't talked to them, but my point is ours is expandable. We go to 300,000 square feet if we wanted to. Not sure we will. We probably won't. But we could go to like 200, whatever we decide to do, based upon the opportunity set at that time, depending what the regulations look like. So, and we have the best store footprint. Everybody knows that because we serve the most people, the richest people, and so it's a great footprint. Now, they're all good footprints, don't get me wrong, but ours is superior to that. So I feel like it really underpins the value of Jushi, number one. And number 2, it shows that I think that Verano really wants to get in because I'm sure they applied for one of the 20, but they did this before everybody else could do. They sort of locked it up. I think it's super smart. It shows their willingness and to take risk and do something like this. And I think and I think it's great. And they're a great company, obviously. So I feel great about this. I think it's really good for Virginia.
Interesting. Lots going on, that's for sure.
The other thing in Virginia that I want to point out to your viewers is HSA 1 license, right, gets given out in 6 weeks or so.
So you're going to have optionality to service them from a wholesale perspective.
By the way, that's definitely going to happen. I shouldn't say definitely. I don't know definitely, but like 6, you could open the stores quickly. Why wouldn't you do that? If you're a well-capitalized MSO that does it, that's sophisticated, you would think they would open the stores quickly, and they would rely on. By the way, we're putting our money where our mouth is because we're going to put $5 million more into our facility to bring on more canopy in the existing warehouse to service that kind of growth because we believe it's going to happen. And so again, if it's a sophisticated MSO or a well-financed private person, they should want to open those quickly. And then the GP will take the grow processor will take at least 24 months, probably more. Remember, it's not just getting it up and building it. You have to plant and wait. It's like watching paint dry, but it's slower. It's a 3-month process, 9-week, 12-week process to bring it to fruition.
And then another thing that I thought was interesting on the call is you had mentioned that the portfolio, I think 308 SKUs that you had rolled out within the quarter. I mean, kind of walk me through that. Is that fragmented across like all of your brands? Like, is it?
Yes.
Let's say value, middle, and upper tier. Like, what does it look like?
It's all brands, all markets. So it's rolling out new SKUs in any market. So it's a broad number. The importance of that number is the customer likes new things, right? If you listen to people like Jeff Bezos or Steve Jobs, the customer can do no wrong. The customer is your customer. That they're always right? I mean, we know that. So you're serving a customer. They like new products. So your job is to say, okay, I'm rolling out new products. So the biggest version of that is always going to be genetics, just bring on fresh genetics. Okay. So a large part of that is adding genetics into the market. Another large part of it is like gummies, adding new flavors, new mixtures, putting CBG with THC, sativas and stuff like that. And another part of it is rolling out newer products that we didn't have before in the market, right? So in Nevada, for example, we didn't have we didn't have brands that we could sell wholesale because the brands were the legacy company we bought, and they were the same name as the retailer, and nobody will buy your New Leaf products when there's a New Leaf retailer, because they're going to say, hey, it's a great product, and I'll go to that store and get it cheaper, and so anyway, so it's a combination of all that stuff, and some of it's very innovative, and some of it's just like churning out exciting things, and the customer loves it, and you see the growth in our inside sales to ourselves. We're very high number now at 54%, I think, company wide.
Were some of the genetics that were, I guess, inclusive in that portfolio the ones that contributed to the 62% uptick I think you saw in yields in Pennsylvania?
Yeah, some of that is genetics. By the way, it's not all just genetic on that 62% uptick.
Yeah.
It's also just operating the plant better, right? I mean, part of getting potency is operations and blocking and tackling, and the other part is genetics. So it's both in Pennsylvania.
Last thing I'll leave you with, you're a hedge fund, you were a hedge fund manager. When you look at what's going on the macro level, however, if we do get some sort of rescheduling announcement, how do you think the whole cannabis industry and stocks will hold up given the current circumstances as to what's going on right now?
I'm thinking of this very long term. So just how I think of Jushi, my shareholding of Jushi, and then my debt holdings. I own every one of our deals, right, including the second lien and the I have warrants from the second lien. I'm spread throughout the cap structure. The way I look at it for Jushi is I'm stuck. I own a huge percent of the company. I'm that set. So to me, it's private equity. So Jim Cacioppo is a private equity holder, right? So for long term, I think it's a great play, and that's how I'm playing Jushi, right? Now in the short term, I position myself in some of the liquid stocks, and because I do run a family fund still, and I don't trade much, right? I try to get long-term gains, and it's not a trading vehicle. It's an investment vehicle, but it has liquidity. And I am long like a basket in the MSOS, and I'm long a basket of these things for the positive events. And the good news that it's taken so long is I'm going to make it to long-term pretty soon, and I'll be able to sell them at a better tax rate. The bad news is that they're going to go long-term soon, right? Because it's taken longer than I thought, So I think
everybody's like that. It's taken a lot longer than people thought, but here we are.
But I've only owned these things less than a year, and I bought them like last August. I think a lot of them I started buying last August when the rescheduling happened, because the stocks didn't react to that in the beginning. When when it started happening, and so, but I do believe the rescheduling will be significant. I think SAFE will be significant if DJT Donald J. Trump gets this announcement going. It might give political cover for the Republicans to pass SAFE. He gives cover, right? I mean, Ukraine aid got done. Ukraine bill got done. The aid bill got done when he decided to let it happen. Right. And he wasn't even, part of the administration or the government at that point. That's just a few months ago. Yeah. So it could be a catalyst. I tell you one thing, I would not want to be short these securities. Right. I would not want to be short these securities. Like, there's so much, good things that can happen. And the companies are stable. Like, and by the way, the companies with the poorer capital structures, you can't short those guys either, because if it does work, they're gonna get the biggest effect probably. I don't really know the numbers. I'm not in the. But my point is you don't want to be short this stuff, and you want to get your positions in place. I think and not be cute. And before I got into Jushi, and I want to finish with this. I got into Jushi because I was investing in Canada, and I traded it quite well, right? Meaning I got in early and I got out early. Now, but I got out way too early often. I thought I was a genius buying Canopy at $2 and selling it at $8, and then it went to $70, right? But if you try to trade cannabis, you just lose, right? You have to basically think of it as a longer term investment. You have to do trade out of it when it gets crazy, and whatever your version of crazy is. But so I think we're going to see some really good things personally.
Feels like the dog days are over of this industry. We're on to something here, especially when you look at Ohio, Pennsylvania, Florida, and then the big, obviously, one is rescheduling.
Don't forget Virginia. maybe Trump
Virginia
gets elected.
Well.
Maybe Youngkin goes into the Trump administration. Right?
That's what I was thinking too.
Get rid of that. And by the way, how is Youngkin going to look? How is he going to look once if Trump comes out and says this? he was like the last guy to veto it because he's running a campaign. He's running on something that's like a 10-year-old philosophy. Like, I mean, and like every day there's a baby boomer dying. There's baby boomers dying, and every day there's a new 17-year-old turning 18, right?
Yeah.
We know how that trade works.
I'm more curious to see what he says about Florida, because Trump literally stated, he goes, yeah, the cannabis thing is happening in Florida. It's on the ballot. If he comes out and says he's in favor of Amendment 3, that goes completely against DeSantis. And DeSantis is going to be sitting there just pissing in the wind. So I'm really curious to see what he says.
And DeSantis just got $12 million from Ken Griffin.
Correct.
Ken Griffin is, I'm sure your viewers know, he's a marvelous, successful guy. He's super bright and done amazing
stuff that he
things.
said, though, like in this day and age, it's like people are on their phones 8 to 10 hours a day and doing their own research, and everything that he claims based on data is so far from the truth. And it's just another example as to how a boomer just looks so dated with some of the stuff that they're claiming.
But Ken Griffin, by the way, hasn't given to Trump. And then he just gave to DeSantis's campaign, and he was an early supporter of DeSantis. And so who knows? We'll see how this works out. But I think it'll be it'll obviously warm my heart if he does say good things about cannabis in any shape or form, any way, shape, or form.
Yeah, and what's great too is that we're seeing stats too that shows that cannabis consumers are really supporting the legal framework, which is great. And everybody's doing their due. They want this to succeed. But listen, tell Trent, tell Dre that we say hi. Appreciate the update. Most importantly, hopefully we run into you next month in Chicago. Where does time go? Summer's over, but that's okay in the cannabis space, because the greatest time of the year for cannabis is Labor Day to Christmas. So bring it on, right?
Bring it on, baby.
All right. Good hearing from you, Jim.
Appreciate it. Yeah.
All right.
Thank you.
Take care.
Bye.
All right. That was good. Man, he's got a lot of energy, but $16 million of their own money. That's backing things up, right?
I mean, he's the largest, like you said, he's the largest shareholder of the business. He's also steering the ship.
Yeah.
I like where they're going.
Yeah. Well, let's keep this earnings season going on. And this guy's coming in right now. He has a big smile on his face. Let's welcome in the CEO of NewLake Capital, Anthony Coniglio. Good to see you, sir. How are things?
Good to see you guys. How are you doing today?
How's it going?
It's been a busy week, which I'm sure you can understand and relate, right?
For sure. Busy week, macro-wise, busy week, industry-wise. It's exciting. It's wonderful.
Yeah. Well, there's been a few reports where estimates have been missed. However, your company, another strong quarter, as you said, you were pleased with the latest performance. As you said, some of the numbers included revenue up 9.5% to 12.5, which was 11.4 million before. Revenue for the calendar year to date now sits at 25.1 million, which is up 10% year over year. And you increased your dividend once again. Am I correct? It's up to 43 cents now, correct?
That is correct. Yes.
Yeah. So up another cent. So last time you talked about earnings, when we had you on to talk about earnings, we pointed out how a few analysts describe NewLake Capital as, quote, under the radar dividend stock that's producing strong yields and growth potential. What do you think has impressed you the most over the last 3 months when it comes to your business as you continue to just be consistent?
Yeah, listen, there are three things I would say about NewLake, about this quarter, and about what it means for our business. I think number one, it's our ability to continue to put capital to work. I mean, that's what our core business is. It's about acquiring properties and providing real estate capital to the industry. And we did that in the quarter through our transaction with C3 Industries in Connecticut for a cultivation facility. It's also about delivering that return for investors. And when you talk about that dividend increase, it was our third straight dividend increase, and our dividend is up 9% year over year. And we noted that since our IPO in 2021, 3 years ago, our dividend is up approximately 80%. And so for us as a real estate 80%. Investment trust, so for us as a real estate investment trust, investors come to us for yield. They come to us because they want to get paid the dividend in a very tax advantaged way, or I shouldn't say I should say depending on one's tax situation, can be a tax advantaged way. But also they want to see that dividend grow. And so we've delivered that. And then lastly, I think also if you look at our 10Q and our earnings call today, for those that participated, you hear it's also important to have active management of the portfolio. We've talked in the past about how this industry has had 24 months of operating difficulties. And in fact, we had some last year, and that's part of why those numbers look so large. I want to be transparent with everybody. Part of why those numbers look so large, because in 2023, there was an interruption to rent for one of our tenants. And what we announced today is that while we were able to rectify that tenant is at this point now, looking to get their business back on track and not going as smooth as any of us think. And so we think for that one particular tenant, maybe we'll get about 50% of rent from them. And so I go into that because I think it's important to just remind everybody that, we can deploy capital. It's all about driving dividends, but it's also about active management for these portfolios.
Yeah. Again, this is something you don't hear too much in the cannabis space, but you're up over 26%. Stock is from the January 1 to now. So one of the real good stories of the space right now. But Anthony, fire away.
Yeah. Congrats on the Q. I know that everything was up considerably year over year. I know we've gotten to know each other pretty well. I know that you're very disciplined when it comes to investing. You're very tactical when it comes to reading the room and looking at the industry. What would you say to somebody that would say that you've been too conservative in the way that you deploy capital, let's say, over the last couple of years, with the industry kind of being at a lull, and now it looks like we're going to start to pick up here going into 2025, I'll call it? Great question.
Listen, we're very happy with the portfolio that we have. And, when you think about being too conservative, hindsight has the benefit of 2020 vision, of course. But even when I look back, there are lots of transactions that could have been done. And had we done them, perhaps it would have worked out fine. But I know there are a lot of transactions that we could have done where I know that they did not work out. And so there's a great saying that sometimes the best deals you do are the ones that you don't. We're going to continue to have our box. We're going to continue to have our disciplined approach. We think it's served us and our shareholders well, and we'll continue to execute on that front. And lastly, on this point, I'd say we've consistently, since our IPO, said we're not going to grow for growth's sake. We know investors like to see that. We know traders like to see high growth. We want quality growth because our portfolio is a very long duration portfolio, and we need to make sure we have quality for that duration.
That being said, I mean, I know we just saw Ohio flip. You're obviously in the trenches, looking at data, looking at different markets. What's exciting to you right now? Like, what are you looking at to get into in the quarters to come in terms of, let's say, pipeline as far as assets and markets go?
Yeah. What's exciting about looking at investing over the next, call it 12 to 24 months, is what we're investing into. We're investing into more healthy markets. We're investing into a much more disciplined landscape. When you think about 24 months ago to 36 months ago, during that period, there was less discipline than what we're seeing out of the operator base today. To be more specific, you saw a lot of overbuilding, creating a lot of overcapacity, which created 12 months later a glut of production and negative volatility or downward pressure on pricing, which created, and in some cases, wreaked havoc on certain companies' P&Ls and ultimately their balance sheets. And so what I like about what we're seeing now is we're seeing these red states like a Missouri, like an Ohio, hopefully we get a Florida in November. We're seeing these red states convert to adult use markets. And we're seeing that growth occur in a very rational and meaningful and sustainable and investable manner. So I'm excited about what we're seeing so far on the ground in Ohio. It looks like the launch is going really well. It looks like the regulator looks like the regulator is taking a very, very practical approach to it.
They all were great as far as some of the inspectors, and I was at various locations the other day, but the turnout was great, and they're all working in conjunction with each other. But, based off that state, like as Anthony said, you're in the trenches, like how much leverage do you think that state has for the overall health of the industry? Because like I said, that is a big, huge growth state, is it not?
It is a big, huge growth state. And part of what drives that growth, and we've talked about it in one of our previous podcasts, is the fact that medical program is not as robust as other state programs when they converted to adult use. And the best analogy, even though Pennsylvania hasn't converted to adult use, similar size populations across the Ohio versus Pennsylvania, but you look at that medical market, and it's 2 to 3 times the size of the Ohio medical market. What that's telling me is that Ohio has some room to run.
That's a great take.
Right. And so we think it's going to be a really good state. And as you point out, a lot of MSOs are in the state of Ohio. And so a lot of MSOs that you have on your show have talked about Ohio being a real opportunity for them to scale their operations there, drive more top line revenue, and hopefully and ultimately drive that bottom line profitability as well.
Yeah. Switch now to Connecticut. Where does your current portfolio sit at now with the recent purchase there?
Yeah, we have about $435 million of funded and committed. And right now we've got about $16 million of the 435 is committed. We have 32 properties across 12 states with 13 tenants.
A lot going on, that's for sure. But as I
there is
said,
a lot. But, you know, I do want to say I listened into Jim. You need to have us back on because I need to debate Jim around the benefits of sell-leaseback.
I wanted to pop you into the screen so bad because he said it and I was like, I didn't think he knew you were down there. And I was like, oh, this would have been great TV, we'll call it. But it was just like time and place.
Yeah, listen, we'll do it at another time.
Where are you a week from today? Let's lock it in.
So to harp on that, one thing that I've seen around Twitter and seen around the general conversation is that rescheduling would ultimately negatively affect businesses such as yourself, such as IPR. I've been very vocal to the contrary. If anything, it's a catalyst to the positive side. So, I mean, what would you have to say on how rescheduling will affect the overall strength of your portfolio as it relates to your tenants and overall affect the business from a capital perspective?
Yeah. So we talked about this on our earnings call. Number one, the elimination of 280E, we estimate in aggregate across our tenant base delivers $500 million of savings, of cash flow savings across our tenant base on an annual basis. And so what does that mean? That's an immediate credit improvement to our entire portfolio. And I have yet to come across a catalyst across the REIT universe where you have every tenant in the portfolio gets an upgrade in its credit quality with a regulatory change. And so that's number one. Number two, and you've talked about it a lot on your show, with the elimination of 280E, many of these companies should be re-rated in terms of the multiples or in terms of their valuations. With buoyed valuations across the sector and bringing in that incremental investor, we think there'll be an opportunity for the operators to capitalize on that increased valuation and start to recapitalize some of the balance sheets. You've talked often about the debt, and Jim even talked about the debt on Jushi. I'm sure if his stock was up significantly, he'd look for the opportunity to bring some of that debt down and recapitalize that. And so what does that do for the tenant base and the industry? Makes it better credit quality, and it gets us into this positive feedback loop where you're improving the credit quality and you're improving the overall quality of these companies. It's just going to bring in incremental investors. And so we think it's very positive. What doesn't it do, though? What doesn't Schedule 3 do? I don't see it bringing in meaningful competition. I don't see it bringing in bank competitors. I just don't. I'm happy to debate anybody on that. Really, it doesn't legalize. It doesn't change the legal status of cannabis. I know a lot of people want to believe that exchanges will flip. I don't believe that. We've said that over and over again. It continues to be illegal. The exchanges will continue to have their AML issues, their anti-money laundering issues. So we don't think it creates competition, but we do think it creates credit improvement.
Well, based on the amount of money that a lot of these tenants would say, like, what does that present to you and your company over these next 12 months as far as growth?
Yeah, well, I think the growth in this industry, as we've all talked about, will come from these state turn-ons. But I think Schedule 3 will be a catalyst for additional state turn-ons. Are we able to get North Carolina across the finish line?
Good point.
Can you actually see some of the existing? I mean, Tillis last week, talking about wanting a national framework. That's certainly his comments. Certainly are going to help at the state level. Can you get expanded medical programs? Does it allow the organizations in Georgia or in Texas to take those very, very nascent medical programs and grow them? And so I think it helps catalyze the industry into growth for medical, into adult use, and expanding some of the medical, and maybe getting some states that don't have a program at all to actually have a real medical program. So I'm very bullish on what it means.
I was saying that yesterday in terms of TAM. I mean, if you want to talk about overall saturation, just look at what we have left to bring into the fold. We've got North Carolina, South Carolina, Georgia, Texas. New York is highly underdeveloped. I mean, and there's a ton of states that I'm also leaving off. There's a ton of TAM sitting still in the contiguous United States. It's going to add a lot of value to this industry. and incremental dollars.
We in the industry often talk about it. The number is roughly 52% of the country lives in a state that has adult use cannabis. And I think even Virginia is included in that. So they kind of don't have it. But, flip that stat around. 48% of this country lives in a state that does not have adult use cannabis. And that's the growth opportunity.
Yeah, absolutely.
A lot of excitement building for the space as we head into the fall. One last thing I wanted to ask you. What do you think is the most popular question that you get asked from would-be investors or current investors regarding your company every single day? Is there one that stands out to you?
It's always about the quality of the portfolio. Investors always want to know about our dividend coverage. And so when you think about a REIT, our ability to continue paying our dividend is critically important to our investors. And so putting that in numbers, if you look at our second quarter numbers, we had an 82% AFFO payout ratio. And for those not familiar with REIT metrics, AFFO is our measure of free cash flow. And as a REIT, we're required to pay out dividends, our taxable income. There's definitely differences between AFFO and tax. But our payout ratio for the second quarter, even with that dividend increase that I talked about, was 82%.
Wow.
So what does that mean? That means we could lose 18% of our revenue and continue to have coverage for our dividend. And so that's really what investors want to know. Do you have a strong cash flow coverage in order to continue paying the dividend that you're paying?
On the flip side, what's the biggest misconception that people ask sometimes that you have to educate them on?
You've touched on it here. It's the competitive dynamics. People find it hard to believe that we're only one of just a few that really can service this industry. And it's tied into that is this belief that with certain catalysts, there'll be significant competition coming in. And I think what gets lost is that this industry is extremely nuanced. And we've been at it for over 5 years, creating relationships and developing an underwriting approach that's delivered phenomenal results for our investors. And arguably, I think the data will show, better than just about anybody else in the industry. And so that takes work, that takes knowledge, that takes experience. And I don't think somebody who is a real estate professional can just decide that they want to get into this industry and be able to deliver for their investors the way we've been able to deliver for ours.
Yeah, I've seen it firsthand over the 10 years that I've been investing and watching the sector. There's been a lot of people that have tried to do what yourself and your peers have done, and it's all in the underwriting process. They came in, underwrote the wrong deals, and blew up very quickly. There were a bunch of them that were going public in like 2015, 2016, like just thinking they could come in and do it, and much harder than it looks.
Yes.
Hence the reason why traditional banks are going to lean on people like yourselves heavily too, even if there is some sort of safe banking that passes, right?
For sure. But you know what, even away from cannabis, think about this, away from cannabis for other regular way real estate categories, there are sale leaseback REITs alongside banks because we offer a different product. What a bank is going to offer is a mortgage. And so what Jim has fits for his capital structure, his mortgage, that is an advance rate off of the value, the estimated value of the property that an appraisal may put. And what we often see right now is banks that do provide capital against real estate will provide anywhere from a 50 to 70% advance rate on non-cannabis value. And because these properties tend to be overdeveloped relative to non-cannabis because of the need for more HVAC and power, these are overdeveloped properties, if you will, very similar to lab space as an example. You find that if somebody has a $30 million facility, I'm generalizing here, maybe they'll get a $15 to $20 million loan. And so in a sale leaseback, you typically get the full amount that you've put into the facility. And so banks don't play in that game. They play more in the mortgage game. They want to have the nice collateral coverage. So it's a different approach and has a different place in the capital structure.
Okay. Family shops, institutions, garnering attention, conversations pertaining to that.
Yeah, we talked about this on our call also today. Maybe you guys listened in. We spent a lot of time this year crisscrossing the country, meeting with investors at conferences, one-on-ones and virtually. And yes, it includes some family offices, small cap investors, individual investors, smaller institutions. And, people hear the story. And there's a lot of interest in NewLake. And when you look at our liquidity and you look at the share volume that we've been putting up this year versus 2023, we've seen a significant increase in volume. We've seen an increase in investors. And all that's positive. I mean, that's our job. Our job is to be out there talking the story, creating awareness. And so we've worked hard so far this year doing it, and we're going to continue doing it well into the balance of this year.
Do you find when you're talking with these investors, like how well versed are they within this space? Like brand new, do they know a little bit about it? Like most important, like why are they interested in the actual industry? Like what's growing, do you find?
I'd say it's about 50-50. Half the people understand the space. They've focused more on the operators, and they're becoming aware of NewLake, and they see, wow, this is more, I don't want to say more interesting. This is a different way for me to have a view on cannabis. I can get paid some current income. I'm not going to have maybe the 5X I would have if I were to invest in a plant touching business, but I can have exposure to the sector and get paid current income. Then there are others who are just unaware. Maybe they're a REIT investor and they don't really know that much about, the cannabis space, but what they see with us is a business that has 0.2 times debt to EBITDA, pretty much almost an unlevered REIT, which is extremely unusual. And when you look at our dividend growth, you look at our AFFO margin, one of the highest across the 200 plus publicly traded REITs out there, they start to look at those metrics and they say, you look very different. Why is it you're getting this? And then we have that conversation. But what a lot of times this conversation ends in is custody. And we've talked about this before on your show. The big issue for these businesses and our business is exchange and access to custody. And I end so many meetings with people say, I get it. I love it. I can't figure out a way to buy it because I can't custody your stock. And so there's a lot of, I think, pent up demand for people that want to play, not just NewLake, I think the broader space, that because of custody, just can't get it done.
Year to date, you're up 26%. And if you've extended to 12 months, flip that 2 and 6 around, you're up 62%.
There's the disclaimer. Past performance is no indication of future success. We're grateful for where we are. We wake up every day thinking about the portfolio and being judicious for our shareholders.
Yeah. Well, listen, appreciate the update. Great work. And most importantly, just tell the team that we say hi and look forward to seeing you in next month. We're actually going to be in New York, so we'll be in touch with you. And then as well, we're going to be in Chicago. So we look forward to catching up in person. It's been too long.
Yeah, no, it'd be great. Look forward to seeing you guys. Thanks so much for having me.
Yeah, thanks Anthony. Appreciate the update. What a story. They're a building story. Full disclosure, NewLake Capital is a client of ours and providing some educational content for you. But yeah, what a story that they're building is the numbers. It's all in the proof is in the pudding, as they say, right?
They're doing great. They're doing great. Their share price is not subject to the extreme volatility that you see in the MSOs.
Yeah.
They pay a dividend. Obviously, it's not financial advice. I mean, I had a bunch of people get into NewLake that I personally know when we first started, when we first met Anthony, and I found out about the business because I wasn't aware of it prior to that. And I mean, the stock was around $13. It's sitting at 20 today. They've raised the dividend 3 quarters in a row. He underwrites. They obviously have the secret sauce down to where they're underwriting these assets. Their portfolio is great. I mean, it's a bang up asset. You can't really say, you can't knock it. You can't knock anything that they're doing with NLCP. Yeah. And I don't want to sit here and do an infomercial for the business, but I mean, that's just my honest opinion.
It is what it is.
Undressed, you can't really knock it.
Yeah. Tomorrow at 12 o'clock, actually, we're doing a live stream tomorrow at 11 a.m. Once again, we'll do a quick recap, but Terracin will be joining us along with Village Farms. What a week it's been, Anthony. And then right after that, we're doing a pre-record with David Klein from CGC. So I've got some comments about CGC from Robert. Good to see you, my friend. Thanks for checking in. Let's go. David Klein will join us at 12 o'clock based on their latest earnings. And we'll be pushing that out probably on Monday morning. So let us know. If you want it out Monday morning, great. If you want it out right away, later Friday or early Saturday morning, we can do that too. Let us know on the timing wise, and we'll make sure that we post it on your feedback. Make sure to click on that QR code, subscribe to our baked in newsletter. We've had a lot of great takeaways from all the earnings reports this week. So if you want to see what our big takeaway is, make sure to subscribe as well. We're updating all of our research reports from some of the biggest MSOs with the latest earnings season that has been announced this week. That's about it. Long week to say that, my friend, and lots going on. That's for sure.
Definitely. Definitely. This whole Trump thing is going to reverberate for a while. Yeah.
We got to talk about Cresco too. Charlie's coming on early next week on Monday.
Cresco did well. Cresco did well. I picked up some Cresco when the Trump thing broke because it wasn't moving with the rest of the pack. Yeah.
All right.
We will see. I
All
mean,
right.
Trump coming out in favor of cannabis could be a lie. It could be just him getting talking points for his campaign. I don't care what it is. I'm also not saying like it's a net positive for everybody, but I'm hoping that that's the lever that we need to get the Democrats to go do something and get a tangible win, which is safe, which is hope, which is final ruling on S3. That's all I care about. I don't care who's supporting it. All I care about is what's actually going to happen.
Yeah. If your take at the beginning, I was like, that's 100%. I'm on board with that and completely agree with that. That is a card that he's getting behind because obviously he wants the younger vote. He wants the approval rating, but it's going to force the situation to get something done because the only way to really own that message is doing something about it. And this is something the Dems could have probably done.
Yeah, and there's only one way to say that message. You're either for or against it. There's no middle ground.
There's no gray.
Especially as it comes to Amendment 3. If he's going to flat out say that he supports Amendment 3 in the state of Florida, that's huge. Do I expect I don't know what he's going to say, but like I said, he's a politician. He's running for president. Cannabis polls extremely high right now. Unless he's trying to lose, you don't have a press conference to then go against marijuana.
No.
On a national level. You don't.
If he said he's for Amendment 3,
it'd be political suicide.
I can't imagine how much more hatred Governor DeSantis would have for Donald Trump. But
I think Trump's also smart enough to see that he's polling above Kamala in Florida. Amendment 3 is polling above the threshold. And the Women's Rights Amendment, Amendment 4, if I'm not mistaken, is also polling above the threshold. So that goes to tell you something.
Well, it's a calculated approach. But the big thing, like you said, is this all basically a sell line prior to the election to get votes? Part of that is yes, but the big
probably
question
is. It probably is. Trump doesn't care. Trump doesn't care about the freedom of the plant. Trump doesn't care about legalizing cannabis. I can assure you of that. He does not give a shit. But if he's going to sit here and force the hand of who we need their hand to be forced,
force it.
Go ahead. Yeah, all day.
On that note, thanks for checking in. Great questions. You had some great questions with Jim Cacioppo and Lucifer. AC seems like a nice dude. Anthony Coniglio is one of the nicest guys to come across in the cannabis space. Christopher Brady, I know that you showed up a little bit late. Good to see you. Who else can we say hello to? Robert Griffiths. Hello from Brooklyn. How are you? Josh Harris. Yes, I know you're bringing up some points about, not believing Trump. Hey, everybody has their own opinion. So we'll bring that up as well. And Mungie boy, if Trump says that, stocks go banana. Guap, good to see you, my friend. In the meantime, everybody, thanks for checking in. Again, smash that like button, leave some comments below, and very much appreciate everybody for logging on here today. We'll see you tomorrow morning at 11 a.m. for our final Trade to Black podcast this week. Take care, everyone.
Yep, see everybody.
Hey everyone, thanks for watching our latest podcast. Lots of momentum building. You guys getting all excited? Leave comments below. Again, we want to take this viral. Smash that like button and make sure to click on that bell for all notifications as we start to bring on bigger and bigger guests. Don't forget to subscribe to our daily newsletter, the Baked In newsletter, by logging on to thedalesreport.com. And we want to take this viral, as I said, and make this community grow. So make sure to subscribe on that channel because we wouldn't be here without you. Thanks again, everyone, for watching.